right, welcome everybody. Another episode of Insurance 360 with my good friend, Mr. Rob Valincius. Rob.
Cheers, Bob.
Keeping it going. Another quick episode.
Unfortunately. It's Friday, but I wish it was vodka.
Yeah, well.
We're on the job.
It has been one of those days where it could very well be vodka, and I don't think anybody would complain about it.
In my head, it's
yeah, exactly. Well, we've been doing a lot during the OEP stuff, and we've been talking about ancillary products, and I was at a meeting last week, Rob. And
when aren't you at a meeting, by the way?
I think I should be more specific than that. I was at a really well-done meeting about Medicare Supplement and the industry last week.
Nice.
With one of the leaders in the industry, and it didn't take me more than about 5 seconds after the meeting was over saying, like, listen, all this stuff we talked about here, we got to talk about. Let our agents know what's going on in the industry, because Med Supp, I feel like, is taking a little bit of a backseat to Medicare Advantage in a way.
Yeah. I mean, look, it's held its rules and regulations, which for us, I'll take that all day, every day.
Yeah. Well, this is true. This is true. There's not quite the changes that come along with the Medicare Advantage space, but still a lot of going on in the Med Supp space. So I was able to drag two new good friends of mine from Mutual of Omaha onto the call here today, our podcast. And I got Jon Enenbach and I got Jeff Ganow, both with Mutual of Omaha. Gentlemen, thank you so much for coming out and joining us here today.
What's up, guys? Yeah, thanks for having us.
And I know he's caffeinated up. I saw a C4 over there.
That's what we needed, probably. More than alcohol, we probably needed to go C4 today. That would have been helpful.
We need to get pretty jacked up for this, right?
Yeah, exactly. So Jon, you're the VP. You run all the sales and the brokerage channel over at Mutual of Omaha. And then Jeff, you could take right after me. You're an actuary by trade over there, right? You love numbers. You like equations, right? Giving all the gory details.
I am. I give all the gory details. What it is I'm going to lull everybody to sleep. Jon's going to wake him up. So
Well, you're all the details and Jon's all the sizzle, right? Everybody, that's the way it is. We sell on the sizzle. We just got to make sure that the stuff's looking good.
We call that the shake and bake.
Yeah,
the shake and bake.
Lightning and thunder. I don't know who's what.
Before we get going, though, I mean, Med Supp doesn't take a backseat to anyone. I'll tell you that.
We agree here at Pinnacle.
Shots fired.
Yeah, well, 100%, and that's why I said we talk about ancillary, we talk about the MA so much, but the Med Supp market is still so strong. I mean, we do a ton of Med Supp. We train all of our agents on both of them. I mean, in our philosophy, an insurance agent selling Medicare should have both in their bag. Talk to a client about what's best for them, what are their goals, what are their pain points, what's important, and make a decision for that individual at the time of sale, not going in and just, putting some drugs into a system and saying, okay, here's the best one, kicking it out without doing that extra bit of personalization. I mean, that makes sense to me.
Yeah. I mean, look, when we train people here, it's on that scope of appointment, you're checking off every box, Med Supp included. That box is always checked 24/7 because you never know where the conversation is going to lead.
Oh, 100%. And unlike MA, we talked a little bit about Med Supp being not quite as, CMS doesn't quite, they trying to get their fingers in a little bit. I know probably Jon can talk a little bit about how they want to, maybe try and get involved a little bit, maybe a little pushback on that from the industry, hopefully is happening. But, there is some definite stuff going on in the Med Supp market that's a little bit new for this year. I mean, some stuff we haven't seen before, or we haven't seen maybe to the extent we're seeing it these days.
Yeah.
First off, Mutual of Omaha, you guys have seen it all. So when I say maybe stuff I haven't seen, you guys have probably seen the ups, the downs, the sideways, the industry shifts, Plan F, macro, going back a couple of years. I mean, there's been a lot that's happened, right?
There's a lot that's happened. Yeah, Mutual of Omaha has been doing Medicare Supplement since 1966, right? So 59 years, you're bound to see some stuff, right? Even in the 90s, our Mutual of Omaha was instrumental in drafting standardization legislation at the time. yeah, we've been doing this a long time. We know what we're doing.
And you kind of got to go back. I mean, when Medicare first started, Mutual of Omaha at that time was the largest health insurance company in the country. So the government came to us and said, hey, how can we get this thing off the ground? They've been coming to us ever since the beginning to kind of consult on how to make Medicare better. And we continue to do that to this day.
Yeah, and it's a great point. It was very interesting, and I go back to the meeting I was just at. I always think of the decisions that are getting made, not only at the state level but federal level. Do they actually reach out to an insurance company like Mutual of Omaha with all your expertise and industry knowledge and say, hey, listen, we may be doing this. What do you think? What is the impact going to be, right? Does that happen? I mean, I would hope it does, but doesn't mean that it does.
So oftentimes, with just the lobbying power and things these days out in DC, there's a lot of association groups that are out there, right? And so I would say that oftentimes they're working through these lobbyists and these trade associations and not necessarily a lot directly with the insurance companies. Now, that being said, Mutual of Omaha, we've had more of a presence out there, just getting out there and telling our story, talking about the importance of consumer choice in the market and how to protect seniors. And, I would say that, we get varying levels of engagement. Sometimes we're, barking up the wrong tree, but there's some times where absolutely we get good engagement. We get some proactive reach out. We actually just spoke to some folks with CMS, the OIG, a couple days ago on a reach out on something we had sent over their way. So it's good to get that kind of engagement. I think it's getting better.
Even more so, your team is actively working with state departments of insurance, right? Medicare being really more, or Medicare Supplement being mostly at the state level. That's where a lot of the work your team does.
Yeah.
It's literally going directly to them and having conversations about the state of Medicare and Mutual of Omaha's opinion on it.
Yeah, absolutely. And, a lot of times people are like, well, it's in your backyard, it's in Nebraska. I'm like, well, actually, Nebraska is just a small piece of our Medicare supplement. Most of our bit we sell nationally. While, we were at the Nebraska State Insurance Department last week, a couple weeks we'll be in Kansas. We've been talking with the state of Texas. So we deal with every state and have a lot of conversations around the state of Medicare supplement.
That makes sense. And when you look at the Medicare supplement, I mean, listen, you're looking at loss ratios, but it's not just like what happened last year. I mean, it really is. You go a couple years back. We can even go back as far as COVID, right? And I hate even talking about it anymore. I mean, it's like I don't know about you guys. We were in the office like June 2020, and I couldn't work from home. I just wasn't equipped for it, and I was in my office by myself with the door closed, and I was trying to get things done. But I mean, the one thing that was definitely not happening is people weren't getting a lot of surgeries and other things done. So I think as an industry, you guys can speak to this, but I mean, you anticipated 2021, 2022, everybody was going to start rolling out there again, and there was going to be a greater than normal, hit on you guys as far as the claim exposure out there, right?
Yeah.
I mean, that probably had to sneak up on a lot of companies if they weren't preparing for that.
And it's funny because, like you said, we certainly wish we could get away from COVID too, right? Like that's a period, I would say, we had never seen before. I don't think any of us here had ever seen before, and I sure hope we never see again. If you go back in that time machine, right, 5 years ago, and you remember what happened during COVID, and there was a point in time, I remember looking at the data where on a claims basis, claims were down about 50%, right, half of what we would typically see on a daily basis. We process 125,000 claims a day. We do a lot of claims. And so when you see those outliers, you definitely see something happening. And, our first thought was, well, this is going to be a problem if this drags on too long, because there's going to be the consequences of everybody that's delaying care. And, you can go back to that time of 2020 and 2020, you remember the Delta variant, and there was a time there where there was a nursing shortages because they were burnt out. And a lot of these elective type procedures and care was not getting done. And yes, we said these claims are going to come roaring back. We expected it to come roaring back in 2021, 2022. And what I would say is we didn't really see it come back heavy until the end of 2022, going to 2023. And that's what we saw. Like, this is what we've been waiting for. Now that we're on that side of it, we're seeing far more utilization of outpatient procedures, outpatient elective procedures, which, our population's a lot of knee and hip and shoulder replacements, things like that. We've seen a rise in cancer claims. And, interestingly enough, like during COVID, you would expect things like cancers and ER visits and stuff like that to be steady, but it wasn't. Everything was down. Whether or not that's people not getting the preventative treatment they needed or getting the diagnostic care that they needed. And on top of that, drug costs start going up and so on. So we're living, while I want to get away from COVID and never talk about it, we're still living with the effects of it.
Right.
We were, a country of, however many 100 million people that are kind of going through a real-time case study. And it's interesting.
So what you're saying is I should have invested in outpatient and surgical facilities in like 2019.
Yeah.
I get to look. There's a lot of crazy stuff happening now too. You got the bird flu, pneumonias going around like crazy, and it's much easier to get into those outpatient and urgent facilities than it is getting into a hospital, which is crazy to think.
Yeah, you look at things like, and it's interesting to kind of see what's out there, right? Now you got the measles. When's the last time people talk about measles?
It's true.
And flu, the flu deaths were, if you guys have seen, are up this year. And flu deaths are up, vaccine rates are down. And, coming out of COVID, that's one of the effects we're seeing is vaccine rates are down. Is whether or not that's correlation or causation, I don't know. But at the same time, again, we're just looking at this and these effects are still coming through in real time.
Yeah, no, that's crazy. Now, I would also anticipate, just like anything in the health industry, you've probably seen some case studies going on, maybe that what's the buzzword now? The fraud, waste, and abuse. You hear it like every day with Doge.
Doge.
So throw some of that experience in there, where all of a sudden you're seeing these spikes in certain types of procedures and certain types of claims coming in that maybe doesn't quite meet the smell test a little bit, and you got to dig into that a little bit, right?
Exactly. And as you look, we talk about loss ratios and stuff all the time, which is really a nerdy insurance industry term, right? Claims over premiums. And in Medicare Supplement, one of the things that a lot of people, especially the lawmakers, don't understand, and CMS, is that when it comes to Medicare Supplement, all premiums are paid for by the customer, paid for by the senior, right? In Medicare Advantage, the revenues that insurance companies get is coming from the federal government. And so Medicare Supplement, 100% paid by the customer. And so when claims are up, you have to collect more money from the customer. But what we try to do at Mutual Omaha, we try to also have an intense focus on the numerator, the claims component. We say, look, we want to pay customers' claims. That's why we exist. But we don't want to pay the claims that we're not supposed to. And that gets into that fraud, waste, and abuse. And I know we talk about that with Doge. It's a buzzword. I'm not sure we're talking the same language, by the way. Like, I don't. The same terms, but maybe different definitions. But what we see, and this actually materialized about, I'm trying to think, was it about 2023, yes. 2022? Yeah. Anyway, we started seeing a whole bunch of catheter claims. Like, how weird is that? People just ordering catheters. And, you call customers and you go, did you actually order these? And they're like, no, thousands of them. And we're like,
oh, everybody needs 1,000 catheters. Well, sure.
And they were like, I'm pretty sure I would know if I was using these. But so anyway, no, turns out that these weren't actually being ordered by the customers. They're never receiving these things. And, this is a situation where, somehow, some way, somebody got a hold of somebody's Medicare number and was fraudulently billing for these things. And we were able to start just identifying these fake service providers that were issuing these things, and we were able to shut them down, right? Catch it, not pay the claim, and we actually were sending the information to the DOJ, saying, "Look, this is what's going on. Somebody help us stop these things." Because while it worked for us to not pay those, Medicare, according to our data, was paying it. So
right. So they're getting it as well as you guys are getting it, and they're not catching it, but you guys are catching it.
Yeah. So the way it works is in supplement, Medicare pays first, and then it comes to us. And so we can tell if it goes to Medicare, it gets paid, it comes to us as a Medicare approved claim. So it came to us that way. As far as we know, they paid it. Now, whether or not anything went back or they went to these fraudulent people and said, "Hey, give us our money back," and they started writing checks, which I highly doubt. Yeah. But anyway, so we continue to dig into that, and what we see is several instances where customers are either getting billed for something they didn't actually receive, and there are things like continuous glucose monitors and things like this, right? And it's a population that's I don't want to say easy to take advantage of, but Medicare, it's complex, and stuff can slip through the cracks. We see durable medical equipment. While it's great, customers need it, and most providers are really, really good. We see situations where providers will be like, "Oh, you have supplemental coverage? Oh, yeah, this is a $50,000 wheelchair." It's like, no, that's a Tesla. Like,
right.
Yeah,
that makes sense.
We try to work with lawmakers and everything on this as well, and we actually are continuing to see really big numbers on something else. And I won't talk about it right now, just because we're still digging into things. We think this is a big investigation that we're currently working on. But look, we're doing everything we can to protect our customers. And that means, making sure that, look, when we had some of these customers that we found the catheter things, we're calling them saying, "Hey, this," and they then comes to find out they found out from us that their identity had been stolen. They thanked us for that, and I was very happy to be.
Yeah, well, just even think about the whole impact. I mean, obviously the loss ratios, this is a big part of what goes into the premiums and what are the rate increases. So if you got all this fraudulent claims going on, that's just going to impact the entire block. That impacts everybody. You've got enough going on with what's going on with the COVID and the claims there, let alone some of this other stuff happening. And then you've got, I wanted to at least touch on it a little bit. So I'm sure this is something really very positive for claims ratio, but the birthday rules. Yeah. Let's talk a little bit about how that's impacting, because there's always been a couple of states that have had this going on.
Yeah.
What are we up to? 13, 15 now? And probably going to be more?
This birthday rule, I use this analogy, right? The birthday rule is a symptom of lawmakers seeing a problem and then thinking they can solve it with the birthday rule, right? So like, oh, people are stuck in paying these high premiums. Let's fix it by letting them switch into a birthday rule. And what we find is for the states that switch to birthday rule, the premium differential between a birthday rule and a non-birthday rule state, when you make that switch, it's 30 to a 40% increase in premiums for new business.
Wow.
It's a big number. And so we educate the states on that when it comes out. Now, it's up to them whether or not they want to listen. And when we see these things, what the states don't want is to take away choice from consumers. And when Medicare Supplement prices go up 30 to 40% because of birthday rule, what you find is Medicare Advantage enrollment starts to disproportionately spike because it makes Medicare Advantage just look that much more attractive. And Washington is a great example, right? It's a state that has open enrollment. They don't allow you to charge by age. So a 65-year-old pays way more for Medicare Supplement than they do in, say like Texas. And they also have level lifetime comp. You can't do the heaped comp for the first 6 years. And Washington has huge Medicare Advantage enrollment. And then Washington this past year was also the state with the most MA plan terminations. So because when Medicare Advantage plans aren't making money, they just terminate it. They'll go find other
Right.
coverage. When Medicare Supplement is guaranteed renewable for life. As long as you pay your premiums, you have coverage. We can't terminate you. So, again, there's pros and cons of both of these coverages, but making sure that, as you guys said, you have every tool, make sure that scope of appointment has every tool out there to make sure they get put in the right coverage.
Yeah.
But like the premiums though too. I mean, when you look at a state like New York, right? It's the same thing, guarantee issue state for Med Supps. It also limits what carriers are going to go in there, because at the end of the day, they're not going to stay in a state where they're going to have high claim numbers and the premiums are going to be super high, right? I mean, you look at New York, you only have two or three options that are affordable.
Yeah.
So it also limits their choice in picking a carrier. Carrier's not going to go in there and be like, oh, that's a profitable state.
Yeah, absolutely. What the loss ratios for New York must be, guaranteed issue and everything else that comes along with it.
Yeah.
Well, what's funny is the loss ratios in New York are actually fine for us. Yeah. But the premiums are outrageous.
Premiums
well, right. You figured out the premiums, yeah.
Yeah, you figure out the premium, and it's you use the word affordable. That's the problem. Is it's affordable coverage, and that's what we're really focused on, is making sure that we're providing.
And then you look at it, Jeff and John, you guys are probably seeing this. You've got the Inflation Reduction Act come out. You've got now the impact on the Part D. So obviously, if you've got an Advantage plan, usually you've got the prescription drug built into it. Now you've got the Med Supp clients, and if the rates are being impacted because of what's going on with the Part D plans, they're buying both. If they're buying a Med Supp, they're buying the Part D.
Yeah.
So now only you're having larger increases. We're seeing more double-digit increases from everybody across the board because of what we're talking about here on the Med Supp side. But then also you look at the Inflation Reduction Act. You've got the changes with the insulin. You've got the $2,000 max. You've got all these things going on in the Part D space. That certainly doesn't help when it comes to Medicare supplement business.
Yeah, but Mutual was smart. They got rid of their PDP ahead of time and just licensed it out to WellCare, right?
Yeah, no, we exited and
no, that was the Advantage.
Yeah.
That was the Advantage.
Yeah.
Okay.
Yeah, in the Part D space, right, with the Inflation Reduction Act, right, it's not just about that they made these changes, the insulins, the $2,000 max out of pocket. Like, those are, on the surface, they're good things for consumers, right? And this comes down to lawmakers looking at something and saying, I have a solution, without looking at what are the unintended consequences of this solution. And
right.
when that $2,000 out-of-pocket max went into effect, and it's not only that. So beyond that, some of the dollars shifted around. And so before, when you got in that catastrophic phase, the plan sponsor or the insurance company was on the hook for some, the manufacturer was on the hook for some, the government was on the hook for some. Yeah. And in the Inflation Reduction Act, they said, well, we should just make the insurance company pay more. And
I think the drug companies had better lobbyists or something when they figured out that pie.
Very good lobbyists.
Like, I'm not really sure how that broke out that way, but it's a whole other conversation.
So when that happened, Part D bids are due the first week of June, the first Monday of June, and when those bids were submitted, as far as we can tell, the data that we showed said the average national bid went up 180%. And so that's, nearly a tripling of your premium. And
I know we were screaming about that here in the office. Like, listen, everybody get ready.
Months.
The 99-cent plan, that's not happening this year. I mean, it's going away. And then all of a sudden, what was it? When did the stabilization?
So the
Part D stabilization demonstration program. Say that 3 times real quick.
They launched that out in July or August, and it just said, okay, look, we realized everybody now their premiums went up. We're going to step in and help. So we're going to subsidize your downside risk. And
the government, that is, right? The government comes in and says, well, maybe we don't want all the clients, the beneficiaries, to have $150 monthly Part D premium. We got to figure something out there.
So the government found a few billion that they could throw at it and kind of save the program for now, and that'll be a 3-year program. Yeah. So we kind of kicked the can down the road for a couple more years, it's not over yet. We still got to see how this is going to shake out. But this is
can that change? What do you think? I mean, new administration, they're trying to save money. They come across this program and they're like, wait a minute, what are we doing here? We're throwing this money at the Part D.
Haven't seen much of Dr. Oz. I thought he'd be a little bit more, like behind Trump. I haven't seen him once.
Yeah.
And he hasn't been confirmed yet, right? I don't think he has. Yeah. But anyway, it's look. There's opposing forces at play here, guys. You have the effort to cut costs, but you also have the efforts to make sure you don't make seniors upset who vote in droves, right? And look, one of those forces is going to overpower the other, and we'll have to see how this plays out. But I tell you now, if Part D premiums go up, that triple in the next couple of years, that's going to be very difficult for anybody who's currently seating in Congress.
We were saying it, and we were telling the agents, and then it kind of like appeared, and nobody really knew what happened. And then the plan stuff started coming out, and they were like, you were wrong. They didn't change them. I'm like, no, wait a minute. It wasn't that we were wrong.
Here's what see the back end.
Here's what happened, right?
Yeah,
But then you have an unnamed company who decided to just cut agents out totally and kept their zero premium plans, and then they noticed that they weren't selling anything. So
yeah, right.
When you cut the guy out, that's normally what happens.
You mentioned we got out of it, and we got out of it way before any of the. We knew that with the Inflation Reduction Act, we were not going to be able to deliver a product that met our standards for our customers. As a mutual company, we are driven to deliver holistic, affordable Medicare solutions to our customers. And we just knew that based on our scale and the new rules that we weren't going to be able to do that. And that's why we stepped away from it, so we could focus even more on obviously our Medicare Supplement and other supplemental products that we'll be introducing to the market even in 2025. So being a mutual company allows us to take that long-term approach with both our rates and our overall strategy. And it's beneficial to have that for our customers, because they know that we're going to.
Look, I sold your PDP, man. You guys had you had a great formulary. So it's not like your product was good, So it was smart.
To live up to what we expected with the new rules. We weren't going to be able to deliver that with the new rules, and that's why we kind of had to step away from it.
Yeah, some of these big guys, they own their own PBMs, and they have more scale in that space. And it gets back to what Jon just said. We ain't.
So isn't there some pushback now with owning your own?
Potentially,
yeah, PBM as far as the insurance companies go. I know there's probably some changes going to happen there too. It's like you got to keep track of this.
There's some pushback, and look, with the regulations and the pushback and the changes that we see, in DC, there's a lot of it. I wish I had a crystal ball and could tell you guys what's going to happen, but right now I'd say just get your popcorn ready and keep watching. So.
But I think the bottom line is it's still a great plan. I mean, when you look at the claims, you say like Medicare paid it, we pay it. Like when you look at the claims being done with Medicare Supplement, I mean, it is tried and true. For you guys, I mean, you guys are an industry leader. They're your standard bearers for the Medicare Supplement market. I mean, you've been through a lot of turmoil and those kind of things. I mean, this market is still primed to grow. I think if anything, there's maybe more shakeup maybe coming in the Advantage space. It doesn't mean that, that's not going to still be a viable product, obviously, but I still think there's a lot of room to grow in the Med Supp space for sure.
Absolutely. When you look at, and I'm going to go on a little bit of commercial here for you. When you look at the customer satisfaction scores of a Medicare Supplement market versus the Medicare Advantage market, the customer satisfaction in Medicare Supplement is actually quite a bit higher, right? We're 90+% customer satisfaction. And the reason why is because you don't have to worry about losing your doctor. You don't have to worry about, if you go and have an ambulance, are they in or out of network? It's just you go get the care you need. You can travel. You can see who you need. And you also have that peace of mind knowing that we're going to pretty much cover everything Medicare doesn't. It's kind of that set it and forget it. Now, the piece of that, of course, is the affordability and making sure that in a period we're in right now, where claim costs continue to rise, you guys have seen what's going on with inflation and everything in the broader macroeconomic environment. And healthcare costs is no different, right? Healthcare costs have risen significantly. And unfortunately, Medicare supplement premiums are moving as well. But I will say this, we are dedicated to the Medicare supplement space. We're dedicated to providing the best broker experience in the industry. You had mentioned the unnamed carrier cutting the agent out. That's not something Mutual Omaha does. We pride ourselves on having that excellent relationship with the broker and being able to provide that service, because the broker is our conduit to the customer. That's not
absolutely. I mean, we've always heard that. I mean, of all the companies, and we've got over 100 companies. I mean, Mutual's never been one we've had. I can't think of anybody complaining about anything. I mean, listen, if anything, you guys are on the Med Supp side, with your e-app, what is it, like an hour it gets issued in? I mean, you just kind of put it into the e-app and it's sort of issued and kind of done. I mean, it's pretty seamless.
Our data shows that 70% of underwritten apps that come in get a decision within 3 minutes.
Yeah, we know that a broker...
That's ridiculous.
We know a broker needs to spend time on revenue-producing activity, and sitting there watching your email, waiting for a decision to come is not where their money comes from. It's from being in front of more people and serving more customers. So, over the last several years, Jeff and his team have just continued to invest in what we call the exceptional broker experience. And the e-app is one of those main things, and all the pipes associated with it, which is the underwriting, the claims, everything about it. Even though claims continue to go up, we are investing in the business to continue to get more Medicare Supplement and to have more brokers sell Mutual of Omaha. We are, as you can tell, we're advocates for the industry, but we're advocates for the brokers as well, because we know how important they are and we know how many people that they help.
Absolutely. We listen to the brokers, right? You said you haven't heard any complaints. By the way, we get complaints, don't get me wrong, but we listen. Right?
Well, listen, everybody complains about something, but it's levels of the complaints, right? And what they're complaining about. So, you know what? If you get something issued in 3 minutes, I think I could even sell a dental vision hearing plan with that extra time I had. Like, you're already issued the Med Supp. Now we can talk about the dental vision hearing plan, right? And just add that on, which is guaranteed issue in its own right. I mean, you could just kind of do it real quick, right? No problem.
Yep. And in our e-app, you can literally check the box and it'll
add it right on.
Add it right on.
And we might as well. I mean, this is a huge audience. This is really the most public setting we will ever say this in, but we're going to add one more thing to our e-app platform. We're going to add...
Wait.
Very official. Mutual of Omaha will be entering the hospital indemnity market.
That's huge.
Prior to AEP this year, Mutual of Omaha will have a HIP product. It is our intent to be incredibly competitive and deliver a high-quality product to our brokers.
Got some competition out there, guys. I'm interested to see what you pull out of the woodwork.
Yeah, that's great.
Our brokers say this is a growing market and it fits a need, and so we said, look, we'll meet you where you need it, and we're going to roll that out. And again, we're going to make sure that provides the best possible experience for the customer.
And the beauty is, everybody that's already working with Mutual contract, it's going to get it automatically added to their contract, right? We don't no new paperwork. I mean, it'll be seamless.
The day that's available, you turn on your e-app, there it is the sub. Yep.
Yeah, that's going to be great. Yeah, that's big news for us.
Huge.
Yeah. So even if they do sell an Advantage plan, you can add a hospital indemnity on it, right?
Right there.
Yeah, and all the ACA that we're doing. I mean, I haven't even seen the ages yet, but we could probably tag on some hospital indemnity with that as well.
Yeah, absolutely. And we're actually finding that through our own research that there's a lot of people who have Medicare Supplement that purchase HIP coverage as well for all the different things that maybe Medicare doesn't cover. Like, maybe you have to come in from out of town and a spouse has to stay at a hotel. It's an indemnity plan. You're just getting the money. You can spend it however you want.
Right.
And I'm not going to kind of spoil the surprise of all the riders, but all the riders that we have are going to go right hand in hand with Medicare Supplement. So a customer who wants to really have quality coverage with both a plan G and a HIP, they're definitely going to get it. But we also think it can be easily put together with a high deductible plan G as well. and really have an affordable solution for a customer.
That's awesome.
Yeah, you heard it here. Contract with Mutual. Now. You're not already contracted.
Yeah.
Pinnacle's got. Did we have the exclusive on that? We'll talk about that later. Shaking his head there. No, that's awesome. Yeah, no, that's great news. I mean, it's a huge product, a huge market for us. I know our agents are selling a ton of the ancillary program, so it's a great fit for what we're doing. And you can't beat the Mutual name. Everybody knows the Mutual name. I love when you guys are at the events. I mean, because you usually have some, the wildlife safari animals there. I've got some pictures with different stuff that you guys have brought to some of the conventions, which is always pretty cool. The what is it? The Mutual of Omaha.
Wild Kingdom.
Wild Kingdom. Wow, I'm blanking out on that. I used to watch it. It was like every Sunday or something when I was a kid. It'd be on like 7 o'clock at night or something.
It's on every Saturday morning at 10 o'clock.
Yeah, 10 o'clock.
10 o'clock Central. So
that's been around forever. That's great.
Brand new episode.
I mean, a lot of great info. I mean, I really appreciate you guys jumping on with us. I mean, there's so much going on in our space just in general. Definitely think the Medicare supplement is something all the agents should have in their bag if they're selling Medicare. If they're working with beneficiaries, there's just that segment of the population that's the right fit for them, right?
Yeah.
And regardless of all this other noise going on, I mean, we're talking some of this stuff going on. It's still a great product, affordable, and makes a lot of sense for a lot of people. So, any last words, Jeff, John? Anything else that I missed before we run?
I'll just say thank you. We appreciate all that you and your team does, and all the brokers that you support. We can't exist without you in the brokerage community, and we appreciate all that you guys do.
Absolutely. Yeah, thank you for having us on, guys. And, anytime we love this business. We're passionate about it. We're passionate about educating and helping our brokers. And anything you guys need, feel free to reach out.
No, sounds great. No,
Thanks,
really appreciate it. Thank you again for joining us. And Rob, I think that's going to be it for today.
Yeah.
Jump out.
Cheers, boys.
Gentlemen.
All right.
Thank you again.
Cheers.
Thank you.